started here. So hello, everyone that's here joining Clay and I. My name is Eric Fournier. I'm a technology consultant with DPC Technology, joined by our founder and CEO, Clay Archer. Real excited about today's topic. We set aside 30 minutes to focus on how to maximize forgiveness with the Paycheck Protection Program. We will be reviewing the PPP expense tracker in an Excel sheet, and we'll also be sending out a version to all the people that are attending today's webinar. So just look out for that, and it'll be very useful for your office. So with that, I will pass it over to Clay.
Cool. Hey, everybody. So Eric, I guess you can just move the slides for me. That'd be awesome.
Yep.
First of all, I just kind of wanted to go over the fact that I am not a CPA or a legal professional. And basically, this is just a forum that a bunch of business owners can get together and discuss the PPP forgiveness application. You know, being your IT guy, and I am actually by my training in college, I was an econ major and an MBA. But part of being the technician in IT means we read the manual. And so a lot of this is just going to have been me reading the manual for my business and how we're going to apply the PPP to us and how it applies to dentistry as well. So, you know, take that for what it's worth. This is just for educational and kind of informational purposes, but it's definitely not something I want you to go to the bank with. Also, not only is it something that you should probably be touching base with your accountant about, but also your banker. I think we've all kind of learned through this process the value of having a good relationship with those professionals. You know, for those of us that had trouble getting the loan, it was nice to have somebody that we could reach out to. And if you do ever need help finding a good banker or a good accountant or a good lawyer, or any professional that specializes in dentistry, don't ever hesitate to reach out to me, because I do know a lot of those people in South Georgia, North Florida, so Central Florida. So if you are ever looking out for or need that, definitely ask me. I'll give you a good recommendation. But you know, for the context of this is just a conversation, and you should really be reaching out to them for any final decisions. But anyways, with that, we'll kind of get started. Last weekend, I guess it was last Saturday, the SBA finally came out with the forgiveness application, which I thought was probably going to be the last step here in actually getting forgiveness for the PPP loans. In actuality, there's still it's still a little bit of a moving target. This is probably going to be 90% of what you're, 99% of what you're going to get, but they are talking about some stuff that we'll talk in a further slide. At this point, most of us are probably getting towards the halfway or the three-quarter way period in our loans. And so it's kind of nice to be able to do some projections. And that's basically what this is about, is kind of finding out where we are, strategically doing the things that we can to maximize the amount of forgiveness that we're going to get, all within the spirit of the final form and how the government intends us to use the program. So on Saturday, this came out and we read through it. There's not a lot of surprises in it. There is some clarification of some things, but to be clear, this form is probably not the form. It may be the form, but it's probably not the final form that you're going to fill out. So at this point, you're kind of filling it out as a worksheet more than you are as a final document. Every individual bank issued the loan, and your forgiveness will actually go back through that bank. So they may have a version of this, or it may be a longer form that contains this in the middle of a longer form. But anyways, this is going to be kind of the heart of what's out there. There will be a link to this at the end of the presentation that you'll get. I encourage you to download it. It's 11 pages. It is a little bit boring accounting kind of CPA kind of stuff, but it really does spell it out, and I think the math is relatively easy, and any questions you have, I think it does a pretty decent job of explaining them. I'm not going to go deep into all of the equations that are in here, but at the high level, it's pretty easy math to kind of figure it out. But it does clarify what the definitions of a few things are. So you can go ahead to the next slide there, Eric. So what we did this kind of early on, and actually, I don't know if you've been to our office before, you know that Hampton Golf is it rents half of our office for us, and their CFO is really a wizard, and she shared this the heart of this, and we kind of took it and adapted it a little bit. So I can't claim 100% credit for making the spreadsheet, but anyways, we've kind of modified it as the rules have changed. I haven't, I haven't put every last little detail into this spreadsheet, simply because I don't think that it makes that much of a difference. This is more of an estimator. But what's good about this spreadsheet versus some other stuff, and I've left a link to another projection tool that Paychex, the payroll company, does. And I've downloaded a couple other ones, but what I like about this one in particular is that it lists everything out. So just really quickly, everything on this one that is yellow is a form that you'll fill out. So if you put in the data that you got your funding, it'll tell you what your 8-week period is in time frame there, and your loan amount. It'll tell you what your maximum forgiveness rate will be. Just a quick overview of it. Obviously, your expenses part of it that are non-payroll can only be 25% of your total forgiveness. So if you had $100,000 in the loan, only 25,000 of that could go to non-payroll expenses. The other 75% would have to be to payroll expenses. And as you go further down on the left-hand side, that's going to be all of your non-payroll expenses. So you can list them out there. And I did this. I would, I go April rent, May rent, and kind of put those out one by one, line by line by line. And it's a nice way to kind of formulate that out. If you scroll down further in this, which you can on this because it's just a screenshot, there'll be a total at the bottom of that, so you can see what your total expenses are. It'll also come up at the top of the screen. In the middle column, you'll put in your payroll expenses. So every time you hit a payroll, you'll put one of those payroll periods in there. Also, you could put in there the payroll expenses like your 401k match and your healthcare match and your portion of those ones as well. So really kind of an easy way just to kind of forecast it out, so you have all those things out there, and it will kind of lay out what you need. When you get to the final forms, you'll be able just to copy in and write in some numbers there. And if you have to split stuff out, you'll have it split out for yourself. One of the big things, obviously, on the forgiveness level, and the kind of the biggest kicker is your full-time equivalency. So over on the right-hand column, you can see there you put your full-time equivalent employees, and you'll put what they were historically. So we'll go through that in another slide about how exactly to fill those out. But basically, any reduction that you have in that full-time equivalency will lower the amount of your forgiveness. So that's one of the things we're kind of looking at and trying to strategically figure out. I'll go into what you can put in those non-payroll expenses as well as we get a little bit further down. There also is just one last thing on that last slide. There is a kicker for reduction in total payroll. So you could have the same number of employees, but you reduced payroll. The threshold's 25%. So that's a relatively high threshold, but there are some penalties for that as well. So anyways, you can go on to the next slide there, Eric. First and foremost, on the payroll side. So obviously, everybody's going to have a lot of questions about the payroll side, and it's the harder part of the calculation. What is a FTE? How do I calculate average FTEs? And really kind of the goal there is to probably try and do as little of those calculations as you have to. So there's some safe harbors, like some things that if you met them, you don't have to do those calculations. But if you do have to do those calculations, this is the time that having a partner like ADP or Paychex is going to be really, really awesome. And you're going to go, thank God that I paid that fee to them all these years, because they're going to make this really easy on you. So if you are on ADP or Paychex, under your reports. We use ADP, so I just went quickly had Christy pop in and show this screen here, do a screenshot of the screen. There are 4 reports there that you can run on the PPP. When the final forgiveness one is, you can see there's 2 loan forgiveness ones. When all the final rules are done and you're ready to go and submit it to your bank, you're going to come in here, you're going to click this button, and it's going to do all of your payroll calculations for you, meaning what was the most advantageous period for you to do your full-time equivalencies. Like I had 25 employees last year and I have 22 this year, but I had a certain amount in the middle there. It will do all those for you. So you won't have to calculate any of those things. We'll talk about that a little bit later, but it's going to do it all for you. And it's going to do that whole middle column basically for you, which is great. So you don't have to do any calculations. It'll just do it straight for you. You won't have to wonder what was my portion of this and what was the employee portion of this. It'll just do it all for you. So if you have one of those, definitely make sure that that's the place you're going to before you even start doing the application, because it's going to do 90% of the payroll work for you. So you can go on the next slide. So there is going to be some questions around FTEs. And so while the scope of this little discussion, I don't think we can get too deeply in there. And honestly, if you have to get deeply into it, it's probably a time to consult a professional. Not that you shouldn't be consulting a professional anyways, but if you get to the point where you're trying to do some forecasts and you can't get it done, or you're not confident in where you are, it might be time to engage them. But so FTE is a full-time equivalent. And so the comparison period is going to be 2 different things. It's going to be obviously the 8-week period that you have the loan. And then you're going to either compare it to February 15th, 2019 to June 30th, or January 1st to February 29th, 2020. So the middle of the year last year, February to 15th to June of last year, versus January to February of this year. And you get to, it's an or, so it's whichever is more advantageous to you. So if your practice was growing and you've added people since last year, then it might be advantageous to use last year's number. Obviously, none of this matters if you didn't reduce staff at all. So if your staff now is the same as it was earlier in this year, or it's greater than it was or equal to where it was last year, you're good to go. You don't even have to worry about this, which is a good spot to be. But some people have reduced staff, and some staff has chosen not to come home. I didn't put it in this, or come back. I didn't put it in this slide, but there is also there's a process in the application that if you did have people that have willingly not come back to work, maybe they were furloughed and they just decided they didn't want to come back, and you've offered the job back to them, they just volunteered not to come, they are an exemption as well. And you can read further in the document. It'll give you that workup. This is the kind of the kicker here, the long paragraph. Specifically, the borrower is exempt from the reduction in loan forgiveness based on the FTE employees described above, if the conditions are met. And so this is for people that have reduced their headcount during the COVID period, the 8-week period. The borrower reduced its FTE employee levels in the period beginning February 15th and ending in April 26th. And the borrower restored its FTE employee levels by not later than June 20th to its FTE employment levels in the borrower's payroll period that included February 15th. So you are exempt from these reductions, however I have to calculate that, if you let some people go during COVID, but you bring them back by June 20th to the February 15th level, then you're exempt. So you don't have to do all these calculations. So that means that on your payroll period in June, you say you had 15 in February. If you have those same 15 in June, you're safe harbored from this regulations or this part of it. So I'm sure there will be questions about this for people that have had reductions. and specifically, how much those are going to ding you. If you fill out the Excel spreadsheet, you'll get a rough estimate of what it is. But I would definitely make sure that if you did have reductions, that you probably are consulting your CPA. Just you want to make sure that that's right, and the reductions, it's going to be, for somebody that has 10 or 15 employees and you were down one, specifically at 10, if you reduce your employment level by 1 at 10, you're going to be down 10%. So if you borrowed $100,000, that's going to be $10,000 ding that you're going to get on that, which is the 10% of the $100,000. So you want to make sure you get that right, and that if you are eligible for getting that back, that you're considering that. So that same person in that scenario that is down 1 at 9, they might consider hiring that person back, because hiring them back will get them back to the higher level. They'll get the $10,000. And I think that's really the spirit of the entire program, is that we're trying to get our FTEs back to the pre-COVID FTE numbers, if at all possible. So that's your best way to minimize any forgiveness issues you're going to have. So you can go ahead and go to the next slide there, Eric. So this is a big one that everybody's asking about, is what qualifies as the non-payroll expenses. So if you own the building in the name of the company, then interest payments for that mortgage that are to the company are deductible. So that is just the interest expense, not the principal. So if the dental practice owns the building, then you can only deduct the interest. Now, if it is a closely held company, meaning your dental practice is John Doe DDS, but the building is owned in an LLC, that's John Doe's LLC, which are two different entities, and there is a lease, which you would have in that case between the two entities, then the whole rental payment would be deductible to that closely held company. So if you had, ABC LLC that you're paying rent to, you are able to deduct the entire amount of that lease. Specifically, that there are some specific things in there that are kind of a bonus as well. It has to be in the lease, and the lease has to be enforced before the 15th of this year. But if you have other things inside of that lease, meaning utilities of some sort, cleaning service, everything that's included in that lease, including the sales tax on that lease, you can go ahead and put that in there. You might want to consult your CPA on to verify that, but everything I'm reading right now is telling me that the whole amount of the lease would be deductible or eligible for forgiveness. So if that mortgage, though, is inside of the company, you're only going to get the interest on that loan. Covered utility payments, people are saying, what all can I kind of put in there? It's pretty well spelled out in the document. Of course, these are just copied and pasted straight out of the SBA's document. But the covered utility payments are business payments for a service with the distribution of gas, electricity, water, transportation, telephone, or internet access, which began on or before February 15th. So basically your phone bill, your internet bill, no doubt, those are definitely there. Your electric bill, gas bill, water bill, those are all there. Transportation, for a dentist office, I don't really think that there's going to be much that's going to fit inside of that category. I also probably would be really strict with these things, and just try not to. I would take them on pretty much face value, because they're pretty well stated in the document. Again, if you have anything that you're questioning there, because it's pretty well straightforward, I would consult your CPA and see if there's anything else that you think is appropriate there. There's on a slide later, they're considering putting a few more things in there that are going to be really applicable to you guys. But yes, for now, they're pretty well spelled out. So one other thing that everybody is asking, and it's pretty well spelled out here too, and probably to our advantage, is what period are we talking about here? So let's just say you got your PPP on April 20th. it's up June 15th, but I've got a bill that kind of straddles that. And this next little paragraph does a pretty good job of explaining what that is. Let me read it for you real quick. It says, all eligible non-payroll costs must be paid during the covered period, meaning the check needs to be cut for whatever that bill is during that period for you. For us, it's April 20th to June 15th. So that check needs to go out by June 15th. Or incurred during the covered period and paid on or before the next billing date, even if the billing date is after the covered period. Eligible non-payroll costs cannot cover 25%, which we kind of talked about before. So basically what they're saying there is they know that it's not going to match up one-to-one. You're not going to get bills in on the 20th and pay them by the 15th. So basically what it's saying is you want to pay all those bills inside of that period. So you may actually be able to, in that 8-week period, get 3 months worth of things in there. I wouldn't try and cheat that too much or whatever, but if you are able to, get more expenses in there, that is a way that I think by basically the way it's written there is within the spirit of the forgiveness application. So you can go ahead and go to the next one there. This is they have obviously come out and said that anybody under $2 million, they're not really going to come back and audit us. But that doesn't mean that you won't get audited for something else. So like anything, I think documentation is going to be key. The other part of the document slide is that your bank may request all of these documents. So, and so one of the ways we can prepare and be ready to be, kind of first in line for the forgiveness is to have all your stuff ready. So, right now I would pull your lease on your building, obviously, or leases if you have multiple buildings. Get all your bills together that fall under those expenses. Get your payroll reports ready. If you're using a payroll service, kind of log in there and kind of pre-see when you're doing some of these forecasts and get ready so that when it's time to fill out the form or that your bank issues the final form to you, that you've got it all right there. But it states pretty clearly in the application that the banks are going to ask you for, and obviously they're going to ask you for documentation on all of that. So make sure that you are working pretty hard to get that stuff together. You can go ahead and go to the next slide, Eric. So, this came out on Saturday, and of course on Sunday and Monday, you saw that there was a couple of groups that were looking for some additional time inside of the PPP. So there's really two big things that look like they may happen. We were hoping kind of that they would probably happen by yesterday, but they recessed without having enough votes to get it done. And so at earliest, this is going to be next week. There is a little bit of a time crunch that they have because the first loans went out that first week or the second week of April. I think whenever it was, it's going to mean that those initial loans are going to be up for the forgiveness period the first week of June. So they're going to have to do something next week if they do it. But the changes that are being considered are two that are really big probably for us. First is that business owners can, let me preface this by, there's no guarantee that either of these things are going to happen or that other things aren't going to happen as well. But just be clear that this is not set in stone yet. But business owners can now use money from the PPP to buy protective gear for workers coming back. So obviously for us, this is going to be really, really big because you guys are spending quite a bit of money right now to make sure that everybody's safe. And, how far that goes for you guys, that's probably open to interpretation, and there may be some clarification on that. But you guys are obviously doing quite a bit and paying quite a bit for PPE at this point. Try and say PPE and PPP 5 times and get it straight. Then you can also use the money to build new infrastructure to prevent the spread of disease. So, half the offices we're going in, almost all of the offices have put up plexiglass at the front desk, sneeze guards, other protective measures. So all those other things that you've done inside of the office, you'll be able to submit those for forgiveness as well, which, those two things can add up to quite a bit inside of the PPE. But the bigger one, and I think this is kind of, would probably make everything else except for reduction of FTE. But if you haven't reduced your full-time equivalent, I would think that this would probably put almost all dentists into total forgiveness, but extend the duration from 8 weeks to either 16 or 24 weeks. I'm pretty sure that this one's going to happen. It's got support from both parties. It's got support in both parts of Congress, and it's got support of the president. At least, as far as they've said to the press at this point. The poison pill that would only probably stop this from happening is that they will probably wrap this up into something else. So they won't just extend it by 8 weeks. They'll extend it by 8 weeks, but they'll have some other legislation that's in there that might spoil it. But I think the odds are pretty good that they are going to extend it. As you can see, and by the number of people that are on this webinar, 8 weeks is a real tough time to deal with all of the things that we've had to deal with, get back to work, bring furloughed staff back, get active, get going, run your business, and apply for the loan. It's just a really tight time frame. And obviously in dentistry, we're pretty well-versed professionals. We have professional help. We have accountants and lawyers that help us with things. But if you're the average small business, or you're a really large business that's bringing back a ton of employees, it would be a difficult thing to get it all done within that 8-week time period. And the fact that some areas of the country are still dealing with the crisis a little bit more than we are, meaning they're still locked down or whatever. So I think that will happen. And if it does happen, obviously payroll over 16 weeks is pretty long. But again, both of these things are just conjecture at this point. But it looks like they probably will happen. If they do, obviously the rules will change a little bit, and the form will have to change a little bit because it's describing everything in a 8-week period. So I'm going to go ahead to the next one, but as I promised before, these are just the links to the main SBA documentation. Also, that Paycheck's a loan forgiveness estimator, which is a little bit different than my Excel spreadsheet. It's very simple. It's just kind of one line, and you're done. And then the Excel spreadsheet, we'll email it to you. So with that, I would like to open it up if anybody has any questions. I know I went over a lot of stuff really quickly.
Yeah, absolutely. Looks like we've had one question come through thus far. And again, if you have any other ones, feel free to write them in at this time. But the first one was in regards to 2 slides ago, the protective gear. What type of protective gear or protective measures could we be missing in terms of the IT equipment in the office?
Okay, so protective. So, and I don't know if you're talking about just in general, a couple of things. As far as like infection control and not spreading disease inside of the office, I would say a few things that people have been really using a lot for us is online forms, so that you're minimizing the amount of stuff that they have inside the office. We've had a lot of people reach out and talk about InLive, and InLive just happens to be the one that we use the most as far as online forms are concerned. The forms are filled out online, and they just go right into your EagleSoft or Dentrix or Open Dental or whatever you're using. That's really great because obviously we're trying to minimize that waiting room kind of interaction. Another big thing that we're seeing a lot of people do is just keyboard covers. I know that's kind of not super sexy, but if you are our client, obviously you have clinical keyboard covers. People have been extending that to non-clinical areas like the front desk or whatever, or just getting more keyboard covers for their keyboards. I will tell you that is one of the things that is a little slow right now. Those are manufactured, and when I say a little slow, typically those things are coming a day or two. They're coming in a week or so. PVP for that. Just across the board, the remote access stuff. So some people are still having some people work from home. I know we've done a couple webinars on working from home, but some non-essential. When I say non-essential, I mean it's not essential that they work from the office. Some people are still not staffing at full capacity. One thing that we're kind of working on, it's not here yet, is some thermal camera stuff that it looks really promising. I'm not sure whether that's a must-have technology or whatever at this point, but you're seeing that roll out in dentistry, where people have a camera that you can just see if somebody's temperature just by them walking up and looking at a webcam. I'd also confirm that they have a mask on too, which is, I think, is kind of cool. But yeah, those are the main things. Obviously, we're trying to minimize the amount of interaction at that waiting room area. So the online forms seem to be the biggest one there.
Gotcha. All right, and we just had one more question come through. So what can an independent contractor who is self-employed that did not work for 2 months do? Can he be deducted his SBA PPP loan as salary?
Yeah, so to be honest, I have not read it from that perspective. There are a couple of sections in there about that specifically. There's also some sections in there about seasonal workers as well. I think I probably would consult my CPA on that, just because I don't want to speak out of turn, and I really honestly I'm not reading it with that perspective. There are also some limits. I kind of quickly went to the ADP and Paychex forms because I think the majority of people are using those services, but there are limits on what anybody's salary can be. So that $100,000 limit on salary, it breaks down to like I think $15,600 that you're allowed to do in it, and those are hard limits. But I have not read it from the perspective of being an independent contractor. I mean, obviously, all of this is just me reading a document, and all the documents as they're coming out. So I wouldn't take me to be the alpha and the omega on knowing that or be consultative on that. I would reach out to a professional.
Gotcha. All right, that's all I'm seeing at the moment for questions, and I know we're right at a 30-minute mark. So this topic was actually submitted in by viewers from the last webinar. So please, if you have any ideas for topics that you want to see, we're trying to consistently do some webinars for our clients and those who are interested. So you can send us any topics you're interested in through social media or via email. Right here is the platforms in which we share the videos once they are uploaded, and share other information as it pertains to technology and also the pandemic. So feel free to follow us on social media. And then if you have any questions pertaining to today's webinar, future webinars, or previous webinars, feel free to reach out. And with that, I think we are ready to wrap it up. Everyone enjoy your Memorial Day weekend.
Yes.
Talk to you
Be
all.
safe.